Welcome to What Makes That Ticker Tick. I'm your host, and this is the show where we tackle key questions about a specific ticker. Today's ticker, NDIVITR. It is the EQM, Natural Resources Dividend Income Index. My guest today is none other than Jane Edmondson, Head of Thematic Strategy here at VettaFi. Jane, how are you doing today?
I'm doing great, John.
Thanks for coming back on the show. I'm so excited to talk about this product. The ticker is a mouthful, NDIVITR, but I love that we're going to talk about topics like cash flow monsters, big oil's lack of investment, and then also you're going to help me understand, are we in an early stage commodity super cycle? So Jane, my first question for you, just as we get warmed up on this particular index and ticker, NDIVITR, tell me about the index use case of the product. What is the objective behind this index?
Yeah, so I would describe the Natural Resources Dividend Income Index, and yes, I'm afraid that is kind of a mouthful. It's really an example of what I would call an income thematic. Mm-hmm. So there's a few themes in play here. First of all, it's a play on the energy transition. We know that old energy is going away and new energy materials is coming into the fore. So you have exposure to both old energy and new energy materials. And the mix will change over time as it transitions. And another theme in play, as you mentioned, is the commodity super cycle. And that favors commodity exposure in this heightened inflation environment. And then commodity exposure also provides some nice diversification benefits. It's not as correlated with stocks and bonds. And there's no magnificent seven of natural resource dividend stocks. So
I like that.
So it's typically under-owned by investors, and it provides good diversification benefits. And it's been a nice inflation hedge in the current environment. So if we go into the income aspects of this approach, as John mentioned, there's these energy material stocks are really cash flow monsters. They are not heavily investing back into themselves, into new exploration. It just doesn't make sense. Because of the high cost, high risk environment. There's ESG headwinds. Everybody knows that fossil fuels are eventually transitioning to cleaner forms of energy. So these companies are paying out cash to their shareholders in a few different ways. So if we look at the graphic, we have a chart that shows shareholders yield. And you see fixed dividends. So these companies are paying high fixed dividends that are generated by positive cash flows, and many of these companies are also raising their dividends. And then there's variable and special dividends. Variable dividends have become increasingly popular with these companies because it gives them more flexibility on their company balance sheets, and they don't have to dedicate themselves to a fixed dividend or commit to that, and they have more flexibility. Share repurchases. We've seen a lot of that activity, especially coming into the end of the year. And according to VettaFi research, there was about 2.7 billion in sharebacks just in the midstream space alone. So there is buyback activity. And then one of the trends that we're seeing this year, this is kind of new, is we're starting to see some M&A. So we had Pioneer Natural Resources that was in the index that got acquired by ExxonMobil. We had Hess that was acquired by Chevron. Both names were in our index portfolio. And I think we'll probably see more consolidation down the line, not only in the energy space, but we'll start to see it in materials as well, because these businesses are scale businesses and they benefit from combining resources in this high demand environment.
Absolutely. So I definitely can see how these cash flow monsters, and I love that, by the way, create some pretty significant income catalysts within this portfolio. Jane, when you think about NDIVITR, is it a unique product in the marketplace? Are there other products out there? Tell me how it's different. How would you distinguish it different from other indices in the marketplace?
Yeah, so there are a couple other ETF indexes out there that do focus on natural resources, but we're the only one that's really focused on the income aspect of this. So that's kind of the unique aspect of this index approach. We screen out companies that pay lower than a 3% dividend, and we weight the companies by the indicated dividend yield to really amplify the income opportunities here. So as a result, we get a nice monthly dividend payout, which is currently around 7%. And then the other unique aspect is, even though it's a global portfolio, we only have the U.S. Traded names in the index. So that avoids foreign tax withholding in the ETF, which nobody likes to deal with.
Very cool. I love this methodology and I can see how it's coming together. Let's move on to questions specifically about index construction. What is the starting universe for NDIVITR?
Yeah, so again, this is a passive rules-based index, and so we are only including companies, global companies that pay at least a 3% dividend. We don't exclude companies that pay less frequently than quarterly. So that's important because a lot of companies that are non-US pay semi-annually or they pay annually, and it's kind of difficult to manage that. So we do that with the index rules, and some of those payouts are pretty significant. So you definitely want to include those companies. Companies like Petrobras typically just pay at the end of the year. So we manage that with the rules in the index, and this all enables us to pay a nice, sustainable monthly dividend.
Fantastic. And about how many companies are you applying these rules to within the starting universe?
Yeah, so gosh, the starting universe of names is probably down to hundreds, and then we get down. Currently, we have about 40 names in the portfolio,
Gotcha.
so it's more concentrated. And again, that's because we really only want to focus on those companies paying the best dividends in the space.
Absolutely. Absolutely. How often is this particular index reconstituted or rebalanced?
So we rebalance quarterly. And again,
Mm,
that's important because most of the companies do pay quarterly. And it is kind of tricky. You have to manage the rules. Like you would hate to sell a company right before they reported their,
yeah.
actually before they paid their dividend. And so for those companies that pay less frequently, we tend to exclude those and just own them around the time of payment. So we kind of, I guess, sort of game the system a little bit there from a timing standpoint. But again, this is all so we can support the highest monthly dividend that we can.
Absolutely. It's all about income in this particular index. Jane, we've
Exactly.
covered index use cases. We've covered index construction. I want to talk about performance measurement. How has this particular index performed year to date, and then maybe over a longer period of time, say since inception?
Yeah, so we've been in a more muted environment for energy and commodity prices. Obviously we had a big spikes there because of inflation, but year to date the index is up 11.9%.
Hmm.
And as I mentioned, it is paying a current dividend right now of 7%. Since inception, I think the cumulative return is something around 22%. So it's done really well in this high inflation environment. Obviously, we're at about 4% core inflation right now. So, that 7% dividend is still a lot better and is more than the inflation right now. And this tends to be kind of tied to inflation, so it's somewhat inflation proof in that sense.
Very cool. Is there any other kind of market environments, viewers should be aware of and how that might impact this particular index?
Yeah, I mean, it is going to be tied to energy and commodities. But the nice thing is, as those kind of go in and out of favor, as I mentioned, there's diversification benefits there. It's not correlated with other asset classes. And, the another nice aspect of this is that it does transition between energy and materials over time. And you're getting paid along the way quite
Yeah,
handsomely with those cash flows to have that kind of exposure. It's
absolutely.
resilient to
Absolutely.
inflation, which is important in this environment.
Yeah. Okay. So performance measurement sounds great year to date, not just the performance, but the dividend yield. I want to move on to my favorite section of these discussions on what makes that ticker tick, and that's really about what's inside. It's an index of say 40 companies that you mentioned. It's a pretty focused index. Those companies all have their own unique story, not just about how they got into this particular index, but what they do. Can you talk about some of the constituents within the index?
Sure, sure. So as you mentioned, there's 40 names in the index. There's about 28 energy names and about 12 materials names. Currently, the weighting is about 70% to energy and 30% to materials, but that does change over time. And it's going to be a function of the dividend weights and the cash flows that transition over time as well. Some of the names in the index that you investors might recognize, you've got, the traditional integrated oils, things like ExxonMobil and
Hmm.
Chevron. We've got Southern Copper, Petrobras is one of the names in the index. So those are kind of more some of the more well-known names that investors might be familiar with.
What about some of the lesser known names within the portfolio or a particular holding that really excites you?
Yeah, we've got plenty of those. One of the largest positions in the index is actually a company called Civitas. That's a shale play. It pays about a 9% dividend. So that's a nice one to have in there. And interestingly, they just acquired another company in the Permian Basin. So that's interesting from the standpoint of that was an accretive acquisition. I think, that's important here that a lot of these acquisitions, even if it doesn't, the cash doesn't go directly to paying out shareholders, accretive acquisitions result in higher dividends too. So in that particular case, it was accretive from a cash flow standpoint, and that's how they're able to pay that 9% dividend. And in particular, I do like the midstream names. There's another name in the portfolio, Hess Midstream, pays an 8% dividend, and they just raised their dividend. They announced a share repurchase. So that's kind of really what the story is about, right? It's all about cash flows and paying those cash flows back to shareholders in either in the form of repurchases or directly in the form of dividends.
Jane, not just cash flows, cash flow monsters. Thank you for coming back on the show today. Today it was all about the ticker NDIVITR, the EQM Natural Resources Dividend Income Index. I think we said dividend like 100 times during this What Makes That Ticker Tick. And I'm not surprised because that's what this product is all about. Jane, thanks again for coming back on. We'll have you back on again soon. Thank you.
All right. Thanks, John.